Good evening, ladies and gentlemen. You're watching News Now, and we have some breaking inputs that are coming in on the state of the economy. The war in West Asia has led to a cascading effect on the Indian economy. The latest data reveals that retail inflation in June has come in higher than was expected. This has come in at 4.38%, and that is something that you can see on your television screens as well. Now, remember, this compares to 3.93% for the month of May, and this has breached RBI's medium-term target of 4% for the first time since January 2025. Food inflation, while we talk about that, it has stood at 5.3% versus 4.78% in the month before. In fact, the sharpest rise was seen in the transport sector as inflation in the sector rose to 4.31% from 1.75% in the prior month. Now, the big question that we're asking on the show is whether the weak monsoon that we're currently seeing, will this further lead to a hike in inflation over the next couple of months? Of course, we have Rajani Sinha. She's the chief economist at CareEdge Group. She's now joining us to discuss the inflation trajectory for India and what's the path ahead. Rajani, thank you as always for joining us here on ET Now. First things first, this inflation print has reportedly risen to 4.38%. It's breached RBI's 4% target mark for the first time in 17 to 18 months, and which is why there is caution. Do you see this as a temporary spike, or is this the beginning of a more persistent inflationary trend that we will see over the next couple of months?
So, inflation was expected to increase in this month because of the increase in fuel prices that was announced. So we were expecting inflation to be higher, but the actual number has turned out little higher than what we were expecting and what the market was expecting. So our expectation was around 4.1%, and it has come at around 4.4%. So yes, it's a little concerning. Going forward, also, inflation is expected to increase. And like we've seen this month, the pressure is going to come from this time. It's food inflation. And like you highlighted, it is because of fuel prices increase. Going forward, also, food prices is expected to further increase. And in the third quarter of this fiscal year, October to December period, we are expecting inflation to increase to around CPI inflation to average around 6%. And for the full fiscal year, we are expecting inflation at around 5% or so. So yes, we are looking at higher numbers going forward.
All right. So high numbers going forward, that is the outlook that you have as far as India's inflation print is concerned. In fact, joining me on the show along with Rajani is Aditi Nayar. She's the chief economist at ICRA. Thank you very much, Aditi, for your time and speaking to us here on ET Now. Now, of course, Rajani is stating that this number, this print for inflation, the CPI print has come, it is along expected lines and it is only going to escalate in the future. Do you hold a similar view given the fact that, there are weak monsoon conditions which are prevailing? There is the possibility of El Nino. And of course, the West Asia war has flared up yet again.
Absolutely. We had actually projected this month's print to come in at 4.3%. So it's a little bit higher than that, not too much. And broadly, food and the full month impact of the petrol and diesel price hikes, these are two of the major reasons that have led to the acceleration in the CPI inflation print between last month and this month. Now, going ahead, definitely, these are the two major things that we need to watch out for. First of all, does the West Asia crisis flare up, which we've seen in the last few days, does that really turn back into a full-blown crisis, or, are we going to be in this kind of a stalemate or status quo for some time? And then, of course, how do crude oil prices react? Right now, they're still under $80 per barrel. So, that's something that we need to watch out for. On the monsoon, it's really not been an ideal situation at all so far. We had a slightly, delayed sort of coverage of the monsoon rainfall over the entire country. And as a result, the monsoon deficit in the month of June was quite terrible at 40%. Now, subsequently, we got a huge amount of rainfall in a short period of time. So the rainfall deficit has halved. But this is really not an ideal kind of a turnout. Now, with the current lull in rains, I would expect that sowing will probably surge when we get the next two weekly prints, because with the rains that have happened in early July and the subsequent break in the monsoon, we should expect that sowing is going to go up. But we need to be very watchful of the situation. In terms of the retail prices that are available, we are seeing a slightly sharper hardening in prices for many food items in the first half of July as compared to what we would have seen last year, for instance. So yes, we do expect the CPI inflation to continue
Absolutely.
hardly.
Absolutely, Aditi, it's a concerning situation. And Rajani, while we talk about the fact that there is going to be, an upward in terms of the inflation trajectory, it will remain elevated. But the question is, for how long will this remain elevated? And what's the worst that you're penciling in?
The worst we are penciling is in the third quarter, like I mentioned earlier. It will peak in the third quarter of this fiscal year when we are expecting CPI inflation to average around 6% or so. After that, we see it inching a little lower in fourth quarter. But overall, going forward, inflationary pressure is going to persist. Like I mentioned earlier, we are looking at average inflation of around 5% or so. The main risk would be, apart from West Asia crisis and the impact of that on global crude oil prices. Like Aditi mentioned, it's very uncertain. Crude oil prices have again reached up to around 78, 80 level. So we don't know where it's going to stabilize. The other important thing which the market participants will be looking at is the progress of monsoon. Even while the deficit has reduced, the critical aspect will be as to how is the temporal and spatial distribution of rainfall. And that would have an impact on overall food inflation. Food inflation, we are expecting it to increase to around 7% or so in the third quarter of the fiscal year, from more than 5% reading that we have got for the latest month. We expect it to increase to around 7% or so.
Right.
More specifically, we will be cautiously looking at vegetable price inflation, pulses inflation, because these are the items which get immediately impacted by poor rainfall. Even though cereal inflation could be under control
Absolutely,
because
and they
of the
have an
buffer
immediate
stock.
impact. Right. Right, and they have an immediate impact on the pocket of the consumer as well. So the impact, as you say, is almost immediate. Aditi, let me get in your thoughts on the fact that Rajani is saying that inflation is going to peak in the fourth quarter, and she's averaging that inflation is going to be around 5%. What is your take on that, and how much of the inflationary tendencies that we are expected to see in the next couple of months, they are going to hover around the West Asia war?
Rajani is saying that it will peak in the third quarter, and I agree with her. That's when we expect to see the peak. It's also partly because of the base effect which is there. And from Q4 onward, we will expect to see some moderation in the inflation readings. How quickly the moderation happens will also be reflective of what is the trend in crude oil prices and in food prices between now and then. So it's very much a fluid situation, both for CPI inflation and for GDP growth as well. For instance, between the monsoon and West Asia, I mean, it's equally sort of clouding the outlook for GDP growth. Now, in our view, we are looking at a slightly lower average CPI inflation for FY27, with just sort of shy of 5%, so around 4.8% or thereabouts. But if we get another bad month on the monsoon, for instance, we will also revise our CPI inflation projection upwards. Risks broadly at this point are tilted to the upside.
All right, Aditi and Rajani, let me come to you now. Given that this inflation reading is going to be long-term, is essentially the view that both of you are holding, but will this inflation reading reduce the likelihood of any rate cuts? Is there now a greater possibility of a rate hike if inflation remains elevated, like the two of you say?
Actually, the situation is very fluid, and that's what the central bank has also been indicating. They have not given any indication of, how they are likely to move going forward. In the upcoming meeting, they are of the view that they are going to maintain status quo. After going forward, their action is going to be very data dependent, depending on how the growth and inflation situation pans out. Because globally also, if you see the global other central banks also, they're being very cautious, and they're not giving very clear indication of what their action is going to be, because they don't want to get bound by that. Depending on what kind of data comes, because the situation is so fluid, You don't know how the West Asia crisis is going to pan out, where crude oil prices will stabilize. Even on the monsoon front, we know that yes, weak monsoon will have an impact on food inflation, but we don't know how bad will the monsoon be. So given that we have all these uncertainties, I think RBI is going to wait and watch in the upcoming meeting. We think no, the central bank is just going to maintain status quo. But going forward, the action will be more dependent on the data. I would say rate cut, the chances are low. In fact, there are chances of a rate hike if inflationary pressure aggravates further.
Right, and we have time for one final question. I'll take that question to Aditi. Aditi, what's your reading on what the RBI policy is going to undertake at the next MPC? And secondly, what is your estimate of how this is going to impact India's GDP reading for this fiscal? Of course, we've heard economists talk about the fact that, of course, due to the West Asia crisis, the growth trajectory is going to remain anywhere between 6.5% to 7%. Would you agree with that? Do you think we're going to be maintaining that sort of a growth trajectory?
As far as the MPC is concerned, I agree with Rajani that we're likely to get a status quo policy in August. I think a rate cut is off the table now. I don't really see a rate cut coming in the rest of this fiscal year. And a rate hike, if at all, would be back-ended. We are probably going to see a continued caution from the RBI, from the MPC, until there are very clear signs that there is a generalization of inflationary pressures in the economy. Only after that is visible would we expect the MPC to start tilting toward a rate hike. So as of now, we are expecting a status quo in August. If at all the monsoon turns out to be much more dire than what we are hoping, then maybe we could get a stance change in October and a potential rate hike in December. We're not really expecting anything earlier than that at this point in time. So that's kind of the timeline that we're seeing for MPC action. On the GDP growth side, we're getting bits of information which turn out to be a little positive, and then something else comes in which is a little more negative. It's really hard to call in terms of what the GDP growth will look like in this fiscal year, given the kind of uncertainty we have from West Asia and from the monsoon. It's probably going to be centered somewhere around that 6.5% mark. So maybe between 6.2 to 6.7%. That's the kind of number that we can look forward to, depending, of course, on how the monsoon and the West Asia crisis turn out.
Absolutely. Thank you very much, Aditi and Rajani, for taking the time out and speaking to us here on ET Now on the state of the economy. And of course, how do you really see growth going forward, India's inflation trajectory going forward? And of course, the two of you state that the worst is not over yet. Once again, thank you very much for joining us here on ET Now, Aditi and Rajani. All right, ladies and gentlemen, it's now time for us to move on and take a look at all that's happened in the markets today. In fact, the Nifty came under pressure initially but made a recovery and closed near the 24,200 mark. In fact, broader markets was in line. In fact, IT emerged as the top sectoral gainer, while FMCG and metal stocks, they came under pressure. Grasim and Tata Steel were the top losers on the Nifty today. And my colleague Snehi is here with more details of how the markets fared today. Snehi, take us through the top trends.
Well, the start of the week has been as flat as it can get, because while we've shot sharp above the 24,200 mark on the Nifty, 24,211 to be precise on the spot basis, it's been a gain of just 4 points, because we started the day with steep cuts. We've seen a very sharp up move to that cut that we had seen in the initial first half of the day, but nonetheless, all in all, it's been a gain of only 4 points, and we've ended absolutely flat for the Nifty with a mild hint of green. For Sensex too, a very flattish move coming in of just 47 points higher on the spot. It's Nifty Bank that has also given very flattish move, 0.1% higher. But the broader end of the market has recovered beautifully, because if I take a look at the Nifty small cap index, 0.3% higher. The mid cap index has also ended absolutely flat, but it has recovered beautifully from the day's lowest point. So yes, while there has been show of strength in the market from the day's low, on a spot basis, we've closed absolutely flat. It's the India VIX that was worth watching out for, 8.5% up uptick at close on that index. And if I take a look at what the sectoral churn has been in the market, one way throughout, the leader was Nifty IT with gains of about more than 3.5% on an intraday basis alone. You had some very good move on TCS, 5.5% higher. HCL Tech was also 5% higher ahead of its earnings. Infosys, Tech Mahindra, Emphasis, Coforge, all of these stocks have done wonderfully well, keeping the Nifty IT afloat. Followed by Nifty Auto, Bank, PSU Banks and Finance. And then on the flip side, your biggest loser of the day was Nifty FMCG with cuts in Varun Beverages, Godrej Consumer, Nestle and Patanjali Foods, followed by Defense, Metal, Realty, Pharma, Energy and Oil and Gas being absolutely flat. So that is what the breadth of the market looked like. In terms of the advanced decline ratio, tilt absolutely even Steven for the Nifty 500 with 250 stocks each, close to that on both the advance and decline. Some of the biggest winners were Newgen Software, Sonata Software, CE Infosystems. Kalyan continued its stellar run. Once again, a gain of 7.5 to 8% on that stock, along with some big movers like Fino Payments, for example, on the back of a very strong Q1 update, and same is the case for Purvankara. On the flip side, J&K Bank, NLC India, BDL, Indian Bank were all under pressure, and that largely sums up the action for the day that we've seen. Absolutely flat on the Nifty, but we've shut shop above the 24,200 mark.
All right, so time now for us to switch our focus to some economic data that's come in. Well, India's June trade data, it presents a mixed picture. While exports continue to strengthen, a sharp rise in imports pushed the merchandise trade deficit to $30.43 billion. That's up from $19.10 billion a year ago. In fact, if we speak about merchandise exports, they rose to $40.4 billion from $34.98 billion in FY26. In fact, the rise in exports, or the growth in exports for the month of June, it was led by electronics goods, marine products, handicrafts, meat, dairy and poultry exports. In fact, services exports also remained resilient with $33.03 billion, and with strong export growth that was seen across South Africa, China, West Asia, Oman and Malaysia. In fact, the Ministry of Commerce stated that these were the new centers that came up as part of India's diversification strategy. And of course, these are some new arenas, some new geographies that we tapped into. But speaking about the trade briefing, at the trade briefing, Commerce Secretary Rajesh Agarwal has confirmed that the framework deal for India-US is ready, and the signing of the deal is going to take place at the right time, and India is looking at a comparative advantage, especially when it comes to the India-US trade deal, pretty much like other deals. Meanwhile, Commerce and Industry Minister Piyush Goyal has dismissed a news report that claims that India is holding out for a better deal. Minister Piyush Goyal has tweeted and said, and I quote, that both sides reaffirm their commitment to an agreement that is balanced, that's commercially meaningful and delivers tangible benefits for businesses, farmers, workers and consumers in both countries. In fact, he also stated that our teams remain fully engaged in achieving this objective. So, of course, a big clarification that's come in from the Minister of Commerce, Piyush Goyal, as far as some reports around the trade deal are concerned. He's dismissed that report and he stated that both the sides, they remain engaged. In fact, let's shift our focus once again to some more news that's coming in on the markets front, because the street is continuing to stay cautious on Indian IT. Top global brokerages believe that valuation concerns aside, AI-related disruption and slowing growth could keep the sector under pressure, with domestic cyclicals, they emerging as the preferred bet. Let's listen in to what market experts have told ET Now earlier in the day today.
So there is a possibility of some technical bounce in the IT service sector. I will not rule that out. But if I take a slightly longer term view of 6 months or 12 months, I would still stay away from that sector, because it is, at the end of the day, a single digit EPS growth sector. And I don't think that is really going to change, over the next, 1 to 2 years, at least. So my sense is that, yes, the stocks have got derated, but I think that derating is fully justified. And I won't rule out, further derating. But even if not, and even if one assumes that the multiple will sustain at the current level, but then the returns will be in line with the EPS growth, which is in single digits and not really that attractive.
With the IT, there are still, I guess, concerns around whether how much disruption would there be to the business models. And when I say IT, I think it's the broader IT, both in US as well as in India. But many of the clients we speak to, they still point to the fact that many of the US peers for the Indian IT companies, they are still trading at much cheaper multiples than Indian software companies. And if you're actually looking at local macro and corporate earnings recovery, we think the domestic cyclical pockets do much better than IT.
This is more negative on, you can say, a medium-term to long-term perspective, because growth has been slowing down in the IT space. If you look at over the last 10, 15 years, revenue growth has come down to 2-3% kind of a trajectory. Your earning growth is also declining. So we don't know what is going to be the terminal P for the sector, whether it will be 24, 20, 15, or maybe it will be a 9, 10 P kind of a sector, which is an X-growth sector.
And taking a look now at an ET Now exclusive, the Central Board of Trustees of EPFO is likely to meet in the last week of July to discuss various issues that are related to investment patterns and compliances. My colleague Prakash Priyadarshi, who has this exclusive, is now joining on with the details.
Well, the Central Board of Trustees of EPFO is likely to meet in the last week of July to discuss various issues related to investment patterns and, of course, compliance, a very significant development. In fact, sources tell us that the CBT may discuss ways to diversify EPFO's investment beyond exchange-traded funds. In fact, options are being explored to invest in indices other than the Sensex and the Nifty to maximize returns. In fact, investment in sectoral funds is likely to be on the agenda, wherein EPFO is mulling to invest its funds in sectoral funds such as metals, rare earths, FMCG, defense, and some other sector. In fact, EPFO's investment committee has already submitted its recommendations to generate more returns, and therefore other options are being explored at this point in time. You are aware of the fact that at present EPFO has investment approximately 88% of its total funds in government bonds and nearly 11% in equities. Now, other options are being explored to generate more returns on investment by investing in other funds beyond ETF. And therefore, this meeting is going to be very crucial at this point in time. However, formal agenda is yet to be circulated, but sources are suggesting that the EPFO Central Board of Trustees is likely to consider this agenda in the upcoming meeting. Back to you.
All right, thank you very much, Prakash, for bringing us all of those exclusive inputs. And ladies and gentlemen, let's now take a look at some news that's coming in from the top court, because the Supreme Court has issued a notice to Sri Ram Janmabhoomi Tirth Kshetra Trust on pleas that was seeking a fair and time-bound probe into the donations theft controversy. The Supreme Court has also sought a status report from the UP Special Investigations Team, or SIT, that is currently probing the alleged embezzlement of donation money at the Ram Temple in Ayodhya. And moving on, there are some crucial updates that are coming in on the West Asia war front, because the Strait of Hormuz is once again in focus as it witnessed weekend strikes between the United States and Iran. The U.S. military Central Command described its forces as hitting dozens of sites and counter-strikes on Monday. In fact, the U.S. military, or CENTCOM, has stated that the Strait of Hormuz is a vital maritime corridor for global trade and Iran does not control it. Of course, the fact remains that Iran has also issued a counter to that point that's been mentioned by U.S. CENTCOM. It remains to be seen how both the sides really arrive at the negotiating table and they sort of expand this ceasefire and arrive at lasting peace in the region. On that note, ladies and gentlemen, it's time's up on News Now. Thanks for watching.